Good morning, everyone. Thank you very much for joining me. This is the morning market review. It is Wednesday and it is the 18th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM, and I want to just draw your attention to my email address, rshaw@fxcm.com, and of course, if you'd like to correspond, just send your emails through to that address. I'm going to go ahead now and bring up our disclaimers. We'll start off with the high risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Pleasure to have you on the webinar. Hey, Howard, thank you very much for signing in. Pleasure as always. Thank you, everyone, for signing in this morning. It is highly appreciated. Good morning, Raj. Hey, Michael. Morning to you. All right, I'll just keep this high risk investment warning on for a few moments longer. Good morning, James. All right, let's bring up the market commentaries disclaimer. Thank you very much. And our references, Market Scope and Trading View. So let's just go and look at Trading View to start off. And we're looking at the real rate. And we suggested yesterday that the real rate was moving up, and that would potentially put some pressure on the risk market. It was quite a difficult day yesterday. By and large, excuse me, by and large, there was pressure on the risk markets. The dollar was supported, but there was an instance during the day when that all reversed. I think that was news coming out of the Middle East. And the idea here is we're in a very, I guess, market news-driven environment. One thing that we do have to note about yesterday is that the retail sales really came in stronger than anticipated. And again, we're kind of in this environment where good news is actually bad news, because what happens is if the economy is growing at a rate that's higher than trend, including elements such as retail sales, which suggest a higher nominal GDP, well, that would affect real rates. It would push real rates up higher, because remember, we are in a policy environment, a monetary policy environment, which is contractionary. So as soon as we see that contractionary policy is not working, it kind of gives the impetus to raise that monetary policy, when I say raise it, to contract it even further. And that's what we're seeing in the real rates here. You can see we had a very large candle yesterday moving up. And the EMAs, we're seeing the green EMA, that's the 5-day EMA, pulling away from the orange 10-day EMA. Well, that's a sign of a momentum increase. Take a look at the RSI, it's pulling away from the 50. That's a sign of a momentum increase. So getting this momentum increase in real rates, well, if we're getting this momentum increase in real rates, that to me suggests headwind. And if there's headwinds, that's the way that we've got to perhaps plan our trading actions. So very interesting start to the week over the last 2 days. Even today, it looks as if there is a blue candle on the real rate. What we can do is we can just take a look at the US dollar and see how that's panning out. For that, we'll go through to Market Scope. And what I'm going to do here is just go through to US dollar. And let's take a look at this on a weekly basis. And it's interesting, dollar is being pushed down. I'm skeptical of that. Why am I skeptical? I think that as long as those real rates continue to rise, the inevitable result, in my opinion, is that there's going to be a dip in the dollar uptrend here. So if we go through Or if we just do a trend analysis in terms of the dollar, we know we've got a higher trough followed by a higher peak. We don't have the next higher trough in, so but the higher trough followed by the higher peak, that's dollar uptrend on the weekly. Take a look at where price is relative to its 30-week exponential moving average. It's above. Take a look at the direction of the exponential moving average. It's pushing up. Where's the RSI? It's above 50. So by and large, as long as the real rates continue to push higher, I think that the dollar ultimately is a beneficiary here. Let's take a look at the daily chart. And this is a slightly more difficult chart to read because it slipped from zone 1 into zone 2. Now, the way that I think we should look at this subject to correction is that this is potentially a dip. I think we've got a 1, 2, 2, 3 here until we see those real rates starting to show signs of topping. Remember, we've been looking at the real rates in terms of a overbought condition, and I still think they're overbought, but despite what I think, they're going up, right? And that's what's important, they're going up. But the dollar has shown some signs of corrective, and I think we might get a sort of a zigzag, a 1, 2, 2, 3, going into another 1, 2 impulse move. The RSI is still above 50, okay? Now, if this is the way the dollar is going to move, well, let's just see the support levels on the hourly. So we go down now to the hourly, and what we want to do is we want to see where's the possible movement in the dollar. Well, the S1 obviously jumps out. Look how we've dropped to that S1, and that S1 level, we've got a hammer that's now being charted. So there's a support tail that's coming in. We don't want to predict, okay? We don't want to predict. In other words, whilst I think this could be a 1, 2, 2, 3 on the daily chart, what I want is the EMAs to cross bullishly, number 1. I want the stochastic to cross bullishly, number 2. Then I would think, okay, the market's starting to cooperate with my underlying thinking. And then, most importantly, we've got to see the momentum push. The momentum's going to push through to the upper quintile and hold. Now, if we don't get those crossovers, the hypothesis, we can scrap the hypothesis. It's not, the market's not cooperating, it's not doing what I'm expecting it to do. So the idea here, S1 level looks to be holding. Now we want to see the technical signals. Okay, we want to see the technical signals there. All right, let me just see if there's any questions that are coming up. But if the rates are going up, then surely the US dollar goes up. Well, that's my thinking. Rates are going up, so I'm expecting the US dollar to follow. But again, Kim, let's not predict. Let's not say the market has to do this. Let us react to what the market is doing. Okay. If we go back to the real rate, and we put the US dollar underneath. Okay, let's just bring that up. Let's just bring US dollar up underneath. All right, so what we have here, Kim, is by and large a positive correlation. Okay, in other words, as the US real rate moves up, so is the dollar. As the real rate comes down here, as the real rate comes down here, I beg your pardon, as the real rate comes down here, so does dollar. So does the dollar come come down over here. Okay, sorry, I'm competing with somebody in terms of, I think somebody else may be doing some work on this, so I'm begging your pardon. But where it kind of breaks down, you've got this, okay? But that's not a big deal, okay? It's not a big deal. When we talk about a positive correlation, it's not going to be 1-for-1. It's not going to be at 100%. It will be at 80%. It will be at 75%. In other words, there will be disparities between the movements, but by and large, the overall correlation, the correlation is going to be positive. So yes, I would agree with you. If rates go up, then we should see the US dollar come up, but it's not 100% correlation. It's not moving 100% lockstep, in step. I hope I've said that correctly. The idea here is, I think that the dollar is going to catch up. Okay. But if I'm trading US dollar pairs, then what? Well, you've got to have your stop loss in. You've got to have your money management in. That's what you've got to have. This is not a guaranteed vocation. You know that you've got to manage the trade every single time. It's not guaranteed to go in your direction. So you have to manage it professionally. Risk management, stop loss in. And then when the correlations reassert, then they reassert. Okay, and Roger's saying, yeah, the dollar subsequently up, but not in a straight line. I think we're going to see the dollar turn here. I think we're going to see it turn. Again, what I think is going to happen and what truly happens could be completely different things. We've got to see the EMAs. We've got to see the EMAs turn positive. We've got to see the stochastic turn positive. And then we've got to see the dollar play catch up. I am of the opinion, as long as the real rate remains up, there is some sort of support for the greenback. Let's take a look at the other majors just to see if they perhaps suggesting similar. We'll go through to the euro. Hey, Katie, good morning to you. Welcome. Okay, so here you can see the euro. We got a let's call this a gravestone doji or an inverted hammer. We want to see the EMA cross down. We want to see the stochastic cross down. Okay, and then we've got to see the stochastic fall towards that lower quintile and hold. Okay, so again, well, we've got the hammer on the dollar, we've got the inverted hammer on the euro. Let's just take a look at the pound. Pound's slightly different because there was inflation that came through this morning, and it was hotter than expected. When I take a look at the release, CPI was expected at 6.6% year on year. It came in at 6.7%. Core CPI for the UK was expected at 6%, came in at 6.1%. So slightly hotter than expected. And we saw that sort of spark up here. But again, to see if we get the rollover, and then does it come down to the 20 minus area. Okay, so the hypothesis that we built, all very much dependent on the higher rates. The higher rates are going to act as a headwind on the risk market and support gold. At the same time, with the geopolitics, gold as a safe haven is, of course, something that so the dollar as a safe haven, I beg your pardon, is something that must be considered. And then Raj just asking if we can take a look at gold. I think we should take a look at gold. And at the moment, gold is being bid. Again, it is acting as a safe haven. We had a really strong, if I go through to the daily chart, let's go to this chart here. We had a really strong move on Friday. Monday, perhaps a bit of a pause, and now we're going back into gold. I think that's been driven by the geopolitical situation out of the Middle East, and gold's gone into zone 1, and if we take a look at the hourly chart, we've got the crossover there. And I just wonder if it stays in the upper quintile. Okay, does it stay in the upper quintile? All right, let me just see comments here. Yeah, okay, let's just take a look at one more, because I'm going to go through to the crypto minute in the next minute or so. Let's just take a look at oil. So we'll bring up US oil. Okay, let's just take a look at this on a weekly basis. Okay, so we've dropped towards that 30-week moving average. That 30-week moving average is pointing northeast. The RSI is above 50. If we take a look at this on the daily chart, it has moved from zone 3 into zone 2. Zone 2 is our neutral area, but the movement from zone 3 to zone 2, coupled with the weekly chart, I think is showing signs that there is a bid for oil. And if we go through to the hourly chart, you can see that the stochastic is in this upper quintile. As long as it stays in that upper quintile, I think there's going to be an underlying momentum, and then we can possibly get the 1, 2, 2, 3, and then if we stay in the upper quintile, that's if we stay in the upper quintile, then we potentially get the zigzag going to the next impulse move up. All right, it's just gone top of the hour. We do have another webinar, which is the Crypto Minute. So we'll end here. I want to thank you guys for joining this morning. Thank you very much. Have a great day ahead, and we shall chat tomorrow morning. Thanks very much, guys.